in this market outlook, what I want to point out is I will not go through NASDAQ, DIA, all that stuff. I only want to point out S&P 500, because one thing about S&P 500 is, it's the market, quote unquote market. The 500 best companies in the country are in S&P 500. That represents the entire economy. And NASDAQ is tech heavy, Dow Jones is industrials, health, all that stuff. So good representation of the market is S&P 500. And that is also an index which is not that volatile. It moves slowly. It doesn't do crazy moves like NASDAQ. And it's more predictable when it comes to technical analysis. So the first chart I got for you guys is, this is S&P 500 in the recent time. So going back to 2022. And all I've done is I've put Bollinger Bands on S&P 500. And what I want to point out is that a 2 standard deviation move. So Bollinger Bands by definition are plotted at 2 standard deviation moves. And a 2 standard deviation move on an index is a huge move. It just doesn't happen that often. And when it happens, that is when it's primed for mean reversion. So in this case, what I'm trying to show you is every time S&P 500 has pierced or tested the top or bottom of the Bollinger Band, it reverts back to the mean. And I've plotted this I've also put a table down here. So going back to 2021, so end December 2021, when it touched the top of the Bollinger Bands, 14% correction. March 2022, 21% correction. August 2022, 18%. December, 88%, and February, almost 10%. So these are the size of the correction that happened when S&P 500 pierces the top or bottom of the Bollinger Band, in this case, the top. So the least of these pullbacks or corrections is 8%. By definition, a correction is 10% or more. But anything below that, we can just call it a pullback. So I'm not saying that it's going to happen tomorrow. It could be because on Friday we saw that we saw some signs of weakness in the market, but you never know. An NVIDIA moment can happen again. But just pointing you, I cannot predict the future, but I can study the data from the past and make a logical assumption of what might be coming. That's why I'm showing you this table. Now, of all these drops in the recent times, what I did was I went back and looked, when was the last time when the upper Bollinger Band was being visited? It has, in this chart, this is a 1 year daily chart. So you can see it happened here, many times. And then you always have some kind of pullback that happens after that. But this was the only time I could find where the RSI was overextended. And in this case, that's exactly where we are. RSI is overextended. It's trying to dip below 70, but you never know. So I'm just telling you guys, this is a monster correction can happen at this time because it has gone up so much. But again, I don't want to sound like a perma bear. So let's pretend that this bull market will continue. So the 19% correction will not happen. Let's say we just get a pullback. So if we get a pullback, what are the possibilities at this point that can happen? Because I do want to participate in the bull market with bull call spreads. So one possibility is that if we get a really minor pullback, this is a 6-month chart of S&P 500. And if you get a 3% pullback, which is nothing, by the way, it's like a sneeze. So if you get that, then we drop to 430 on SPY. And then markets could bounce back and just go up from here. So that's one possibility. In my opinion, the good news is next week we don't have any binary events, which is great because whichever direction the markets pick up, they will continue to go there without something like NVIDIA showing up with great earnings or Powell shaking the markets. So none of that is going to happen. So in my opinion, even if this bull market wants to continue, the easiest scenario is you get a 6% pullback, because that also happens to be around this support level, which is looks like a very strong support at 417. And then we could always bounce back from here, and this would be a good time to start taking some bull call spreads. But this point is also very critical, because if you start if it hits 417, if you get a 6% pullback, and obviously take it with a grain of salt, I can't see the future, I'm just guessing that these are the possible scenarios that could develop. If it touches 417, you will find me waiting for a bounce, and I will start taking some call spreads, although I'm not going to go in full bull mode at that point, because if that 417 gets breached, we could get a short bounce and then markets start going down again. If this level gets breached, then we are looking for a proper correction.